right, what's going on, everybody? Episode 2 of Beards and Bitcoin. Hopefully, you guys are doing well. We got a lot of great feedback last week, so we're going to bring it in even more. And as you guys may notice, Tillman's become friendly today. He's not sitting in the dark corner anymore. He's got a smile. I think, honestly, I think he's just wigging out a bit because he thought back on the fact that he was telling y'all that that he was the big ugly, and then he kind of sat back maybe afterwards and said, "Man, I can't be doing that publicly. This ain't football anymore.
Listen,
I need to show I'm a pretty man."
And, listen, don't hold me to the consistency on that. I go through phases of not caring and then caring a little bit. So,
well, great. Glad to obviously catch up with you guys again this week. A lot of things happening. I see Fibbo Swanee jumping in. What's on, Fibbo Swanee? Man, but I guess the big news, I guess the first thing we should really kind of approach here is, man, oh man, almost $900 million in inflows for the Bitcoin ETFs yesterday. 866.5 million, I think, something like that. Second largest day so far. And honestly, I think we're going to likely see bigger days in the future. We've talked about it here. I know I've talked about it a lot the first few months of this year about how we would see that that flow coming into the ETFs increasing, especially as we got through the end of the summer, got into Q3, maybe Q4, around that time. These companies do their due diligence, they test out the water a little bit, and then kind of just start really putting more in. So, yeah, man,
it's a function. So we won't know where that money came from until, for another 2.5 months. And even then, it won't be completely opaque. But what we will see is all the 13Fs, were finalized about 3 weeks ago. And so we saw allocation by institutions in the Bitcoin ETFs on levels that, were unexpected for the first quarter, like basically when they were launched. So a day like yesterday is not necessarily a surprise, because what we'll find is that, either those same institutions put in more capital, or institutions that are like them or compete with them made major allocations to the Bitcoin ETFs, right? So that isn't necessarily just full on retail rush to the doors. That's probably allocation by institutions that then will have to disclose those allocations in 13Fs, at the end of the quarter. That's my guess of where that's coming from. But the truth of the matter is, it doesn't matter where it comes from. It's going to push Bitcoin higher, which we're seeing literally right now. We've gone from 68 and change in the last 24 hours to 71.5 this very moment. And again, that has to do with demand. And when you see demand, and you've got to go out and buy nearly $1 billion, worth of Bitcoin because it's been allocated, it's going to push price higher. I mean, we're seeing the markets at work, right in front of our very eyes.
Yeah. I mean, again, we are. I'm sitting here looking real quick at the Bitcoin all-time index. By the way, for those that are looking at charts, and we've always used the BLX, the Bitcoin Liquid Index, but the issue with that was that it only updates at the end of the day, after the end of the day and whatnot. This Bitcoin all-time history index, if you go on TradingView, you can type that in and get it. It gives you up to the minute updates, and so that's what I use when I'm talking about it. And right now we're sitting around 72,110. And that all-time high sits just a bit higher up there, right around that 74,400, 74,500 area. So we're like $3,000 off that. That doesn't mean we thrust through it today or anything like that. But, the name of the game has been patience. And I think if you're an investor, if you're not looking to trade, if you're an investor in Bitcoin, you put your money in and then you get your butt outside and you find ways to make more money to buy more Bitcoin. I think that's absolutely the best way you do it. I've got my ways I trade and what I teach at the Trading Academy. And then Andrew and Tillman, of course, have their company, the Arch Public, where they use algorithms that they develop, or that I guess you can put input the parameters into it. Am I correct? Is that how that works?
Yeah, it's a user-driven trading strategy that you can use through your TradeStation account. So you keep your money in the United States. You don't trade Forex or anything like that. You trade futures, which are tax advantaged. And at the same time, you have the discipline and the money management protocols built into a piece of software that allows you to remove yourself from the equation. The human interaction of trading is the books on psychology that you have to read, and the losses that typically people have to take in order to learn themselves and how they respond to being up a lot and also being down a lot. And if you use automation and you use sound principles within that, it really removes a lot of the headache and the emotional swings, but it also improves your success rate because you're removing that human variance or that human dependency. So the markets are, I like to tell people, as soon as you think you figured them out, you are going to be schooled by them. I mean, they will teach you lessons that you think can't be taught to you, honestly.
Yeah.
There are circumstances where you think something has to go up. I remember learning this in business school. There was a case study about a large retailer that was going to go out of business, and everybody was shorting it. I mean, it was so thick on the short side that it was almost inevitable. Everybody's jumping on the train. Well, they did go bankrupt, but the real estate value that they had inside their portfolio paid all their bills and then some. And all those people lost a bloody fortune in that event. And so I don't think timing the market is ever a good thing. I think taking a mathematical approach that's sound, that's built out of the emotion and not in the emotion of trading is a prudent way. So you find things that you want to own. I think there's a lot of case to be made for kind of these keep it simple, stupid. I buy Starbucks coffee, so I probably should invest in Starbucks to some degree.
Yeah.
Like, if you're using something on a daily basis, like you can almost have your thumb on the pulse in terms of whether that's giving the customer the value proposition that it originally did when it caught fire. And so I think it's about just dollar cost averaging into whatever you think is valuable, and then holding that until everybody else thinks it's valuable.
Yeah. The earlier you can get in with that, and the longer it takes for everybody else to figure it out, the better, obviously, you do. But I mean, at the end of the day, guys, we've got, between us here, we've got different ways for you to learn how to get into the markets if you want to, if you're not just doing a buy and hold.
Yeah, there's Chris, again, like I said last time we were together, you do such a great job from an educational standpoint and teaching people the principles of not only investing but trading, teaching people the principles associated with making your own decisions, evaluating what the markets are saying, evaluating trends, learning the language that's used to be able to make those evaluations and make decisions. And people should use you to the maximum that they possibly can. And our company, our focus is that there's been for, let's call it, about 40 years, the way that the markets have worked have turned into just basically a collection of global algorithmic trades. Yeah. And institutions have used those for years and years and years to stay ahead of whenever you're about to push the button to make a trade. And so we thought it was time to bring that technology and put it in the hands of a guy that's got 10 grand, 15 grand, 50, 100 grand, and can then remove that emotion, use our algorithmic products, and just follow it with their phone and benefit. And the interesting thing is, and I've got a couple stories from last week. We finished the month out, above 12% for our entry level gateway product. And on the last day of the month, it just, absolutely hit a winner, a big one. And we've seen people that have come onto our platform, and, there's always skepticism associated with any financial quote unquote product.
Yeah.
And so we take people through a journey of that skepticism, and we tell people we started, the development of our products with the first principle, which is liquidity. right? We want people to have access to their money immediately and at all times. So they test that. They make a deposit into their TradeStation account and they see that they can get it back whenever they want. Then the next set of questions are, is there a team and a group of folks that I can get a hold of when I have questions? Well, there's people inside of our firm. There's people at TradeStation. There's people associated with TradeStation on the institutional execution side at Fox. There's a group of people around you that can be of assistance. And then third, obviously performance, right? And we saw last week, that performance happen in spades. And so it's interesting to see people start the journey with a 10 to 15 grand. And if they have the capability, they're on the phone with us, after the past couple of weeks saying, all right, how much more can I do with this? This is what I hoped it would be.
Well,
how much more can I do with this?
I think that's what's so interesting, honestly, bringing it back to like Bitcoin and the overarching, the podcast is that technology is changing things.
Yeah.
We all have our hands in 5 different technological ventures that we think is cutting edge. I know that specifically because I've talked to both of you about those things. And so if you look at the space that we're in, you're talking about the most cutting edge development space that exists. And so, the ETFs, like what we talked about last week, the ETFs have just begun. There are a tremendous amount of ancillary products that are going to drive volume into those ETFs, right? And we're going to see that just like we've seen some of the states come in and say, we're going to put, Bitcoin into our pension fund. We're going to see a rising tide floats all ships. And that is going to continue to be a rising tide because it's proven to be a decent hedge against inflation, just like many other assets have been, right? And so you look at these game-changing technological gateways and you ask yourself, do they exist? Are they real? Or is it like smoke and mirrors, right? And I got into Bitcoin at the very, very beginning to prove that it was smoke and mirrors. Like I didn't understand it, but I wanted to, right? And I did that same thing with trading automation. The interesting thing about trading automation and kind of the premise behind the company is that I think a lot of people know that it exists. I don't think this is the Loch Ness monster. Like you ask yourself these simple questions of, how does Elon Musk acquire the Bitcoin stack that he has? Do you think he sat in front of his computer or had 5 people or 10 people sit in front of a computer and sit there and execute microtransactions over? I mean, it's right in front of our faces, and yet it's not accessible on the corner of every street. And so the question becomes why, and what purposes can this serve for everyone, right? And so trading automation and blockchain are things that are cutting edge AI driven models that can be very useful to people that want to not only get their hands dirty and get in there and play with them directly, but you can also just use them and pay an operator on a per trade basis, an institutional execution partner of TradeStations to do that for you. So, it's all about education. And I think once you see behind the curtain and once you see the technology for yourself, it's like what we've done with Bitcoin. It's like, it's hard to ignore it from that day forward. You've kind of been bit by a bug that, changes your paradigm. Yeah.
No, I think it's a great analogy there, especially because again, everything is becoming so much more technical. And I have to admit, I'm older. Some of this, I'm like, man, I'll be honest. I hate my phone. I have it because I have to have it. I'm not the most adept at social media. I just don't find it all that interesting. But I do it because, I have to do it with the business and it's the easiest way for me to share my knowledge to the greatest group of people and thing. But, man, oh man, sometimes I just, I want to just pull back and just kind of be like, no, I'm done. But, kind of like y'all, I'm driven to build, driven to educate, driven to help, to those that are willing to listen. So I think, again, I think that's probably part of what drew me into Bitcoin as well, is that technological side of it. And for me coming into it, um, it was this idea that if people really start thinking about it, then they'll start questioning what they think they understand about about the financial system, about macroeconomics, about these things that I was always really geekly interested in as I grew up and as part of my proper educational background. Um, but and most people are very, very limited on their knowledge of it. And that's the one thing I love about, I think, about the Bitcoin community, is that so many people, once they're in for a while, they really start asking questions, and they really start, not necessarily accepting these kind of these sound bites that go out into the stratosphere, all the time,
Right.
about what's going on with macroeconomics, what's going on with finance, how things really work. Because at the end of the day, we're all beholden to that system, right? We can't.
Yeah.
Everything we do is becoming more and more ingrained with that, what ends up being the global financial system, of
Yeah.
which the US is basically the root of it. People can talk about BRICS all they want and what's going on there, but at the end of the day, it's going to take a lot of time and a lot of work on a whole bunch of things to actually get the USD off that reserve world currency status. But as we've talked about before, Bitcoin doesn't need to actually become that thing. It can be integrated into the actual financial system itself and still provide then more stability and more benefit for us, the users of the system.
It can't be understated, to get back to some of the numbers associated with the Bitcoin ETFs. It can't be understated the pace and speed and scale at which the Bitcoin ETFs themselves have grown. Not only is BlackRock's Bitcoin ETF their most successful ETF of all time,
Crazy.
but on top of that, it is the fastest ETF ever to $20 billion.
By a long shot, right?
Yeah. That is a remarkable statement, and it's a remarkable truth about the underlying asset itself, and it also foretells the continued days like we had yesterday of $890+ million of allocation to the ETFs themselves. So it is it's a process by which, and again, I go back to, these are institutions that are significantly allocating to the ETFs, and we won't know who they are, but the scale will continue. And again, a reminder that these products, as fast as they've grown, right? Again, BlackRock, the fastest growing ETF they've ever put out there. They're still not readily available to retail in a meaningful way. There were news stories out this past this past week about Fidelity effectively gatekeeping other Bitcoin ETFs off of their platform. Like that, they have to play ball, they have to pay some extra fees, they have to do some stuff to get the other ETFs even onto Fidelity's larger platform and available to folks. The ETFs at large are still, for all intents and purposes, siloed to the private wealth management level of the larger wealth management organizations. They're still not readily available to somebody that's got $3 million of capital at Morgan Stanley or UBS. They can't buy them. Same thing at an Edward Jones or an Ameriprise. People don't necessarily, Morgan Stanley, JP Morgan, UBS, Merrill Lynch, those are names that are well known. But what people don't know is a place like Edward Jones or Ameriprise, based on assets under management and based on the total amount of customers or households that do business with those organizations, are literally just as big. And they don't have access to the products yet either. So there are still waves of this that are coming. And so you look at price of Bitcoin, and I know, Chris, you've talked about this a bunch based on the great work you do from a technical analysis standpoint. The fact that Bitcoin its price has not moved in the last 2 weeks outside of that 60 to 70 band is that never happened with Bitcoin before. That just didn't happen. It was expected that on over a 3 to 6 week period at any time in its existence, it's going to move 10, 15, 20% one way or the other, right? Very, very different technical work and movement by Bitcoin now. It really is, really is something. So
I think something else that's really interesting about what we're seeing is like the demographic of the buyers has changed materially. And so if you're talking about states and governments and high net worth individuals, sovereign funds, those are long-term holders. Those are they will never trade out of those BTC. And so it's not, volume isn't all the same, right? And so we've seen periods of fever pitch trading volume that peters out, leads to the blow off top, and these massive, massive pullbacks. It's really interesting now what those larger institutions, if we got to see what their buy-in scale looked like and what their quote acceptable price would be towards the upper threshold of that scale, I think we'd be surprised at what that number is, to be honest with you. I don't think when if you look at where the liquidity lies right now, not the paper liquidity that's in the silver market, the cash liquidity, where do the BTC, where do they lie? Well, they lie primarily, in my opinion, in, long-term holders, like the people who got in last cycle, have sat on it for at least 3 years, are needing, are back going, oh God, do I hold this or do I sell it? And you talk about, if you give them a big upside, 100K, whatever that number is, you're going to start seeing a lot of dumps. I think you're going to see people who aren't hardcore Bitcoin believers, but they got in 2017, 2018, 2019. They've suffered to some degree. Now they're looking very positive, and there's real world cash needs that are going to pull that BTC into the market. And I said this from day one, and I still will hold true to it. I think it's never what we disagree upon that gets done. It's what we agree upon. And there isn't anyone disagreeing about the Bitcoin ETF being the way in which people should have exposure to Bitcoin. There's not a human on earth I hear out there other than Peter Schiff saying Bitcoin ETF is a bad thing. Both sides of the aisle have agreed that this is, quote, the approved mechanism that they are willing to agree to. And they've given the mantle to the biggest, captains of industry that exist. So you're looking at like this changing of guard. You're looking at legitimacy coming into the market. You're looking at long-term buyers coming in. That looks like a very different bull run to me than what we've experienced in prior years, where people are cycling from Bitcoin into altcoins, and this altcoin season takes place. I'm going to test my theory against the fact that I don't think there's going to be a proportionate altcoin season like there has been in the past. I'm not saying there won't be a bunch of money that falls into altcoins, because when people get rich, they do funny, crazy stuff. But I don't think you're going to see like an exodus like we have in the past, where 60% of the funds flow from one to another.
Yeah, and we're still drifting higher. Like even as we speak, we're drifting higher above 71.5, and again, that's a direct result of the flows from yesterday, and not just the flows, but what I would say the perception of those flows, right? So there are other allocators out there saying, okay, I've got competitors that are pushing into this thing a little faster than I expected to. So what do I need to do? Well, I probably need to, I need to probably make some more allocation as well, because I'm going to, and here's the thing in traditional finance, especially in the hedge fund world, and in large scale asset management, If you get caught with your pants down, meaning you come to a quarter and you've got to disclose everything that you own, right? And everybody has owned the hot thing that pushed performance up for their funds, and you don't, they take their money out. They leave. They fill out a quarterly redemption request, and they're gone, and they go to another fund or another allocator in some way. So you can't get caught with your pants down and not own the thing that has moved the needle for all of your competitors. And so, again, that's some of the background of the movement that's happening right now.
Yeah. We got a question here from Evans asking, can you tell how much of ETFs is new to Bitcoin and not just trading money from crypto proxies like futures, coin, Mara, GBTC, etc., into the Bitcoin ETFs? We want to answer that?
I'll answer that. I mean, that was probably a first 45 days phenomenon of trading. There was movement, significant movement out of the GBTC product. Now, all of that did not necessarily go back into another product, because that would be almost a strange tax process to follow. But there was some that went into other products, but that particular trade is gone. That particular trade also of people that owned the futures ARB that exist out there, that trade is gone over the first 15 to 45 days. So currently, everything that we're seeing now is new money. It's not being siphoned from some other quote unquote Bitcoin product. It's all new money. And again, these are allocations of scale. There aren't $890 million worth of $100 DCAs into the Bitcoin ETFs from somebody's IRA. That is not what's happening here. So yeah, there's not some hedge fund out there that had a $300 million Bitcoin futures trade on, and they ripped it out of there because the markets would have responded to that too. Yeah. This is new money. If there was consistent, selling pressure from another Bitcoin focused product, or as this guy is talking about, almost a washing machine effect, that means that washing machine is going to start to make noise and tumble and rumble around again, which we saw some of in the first 45 days, because the current band that we were in dipped down to 59, 56. You talked about that, Chris, that 56 level was a key level, but we haven't seen that level in like a month. I mean, it hasn't gotten anywhere close to that.
And the numbers tell you everything. Like, look at the price action, and it will tell you everything you need to know, in my opinion. And so what do I mean by that? Well, if you were in on any of the other cycles, the standard deviation off the mean, the swings were exceptionally wild. And I mean, exceptionally wild. Like, you had wick days down 20% and then up days up 30%, just these massive nonsensical moves that you knew were a product of the market being small and manipulated. And so now look at the market, look at the numbers now. What's the standard deviation off the mean that we see in this bull run? It is a steady curve compared to the previous ones. And I mean, exceptionally steady, like within 2 standard deviations steady. And so you look at like, why would we think that's going to change? I really truly believe that we're going to see, we're getting that curve to where we see the most steady angle of curve and the steady trajectory that it provides. Because if you think about what Larry Fink wants, and you think about what we can all agree upon, is that it's a store of value, right? And so if you have something be a store of value, I think the argument since day one I've heard in the Bitcoin space is, how can you have a store of value that has 60% swings year to year? Well, you can't. And so the maturing of the market that we see is it's really the consensus taking hold, is like, we're going to get behind this and we're going to create a steady curve. And the steady curve is going to be supported based upon the sheer foot traffic and the word of mouth campaign that now big financial institutions have taken under their mantle and their wing. Before, it was just the Bitcoin community going, hey, do you want to see something different? Hey, let me send you money and instantly settle it on Christmas Day. Isn't that cool? You know, now it's nothing like that, right? We have a real marketing department, which we've never had before, right? Bitcoin hadn't had a central entity. Well, guess what? This is really interesting. There's a financial security around Bitcoin that now has a central entity attached to it that can market, that can put up billboards, that can promote. The day has just begun, in my opinion. It is yet to be seen how different the market will be in 5 years. But in my opinion, we will stop measuring in price of BTC and start measuring in price of ETF. That's my opinion at some point.
And micro versus macro too. So here's a little bit of a micro look at the markets. We're also, from a traditional standpoint, we're smack dab in the middle of sell in May and go away, right?
Yeah.
So the overall markets are in a lull as it relates to volumes, in a lull as it relates to eyeballs, as it relates to people keeping close track of everything, people even being in office, right? So imagine again the additional allocation that's coming in August, September, or October. It's going to be really something to behold. Because everybody that a lot of the people that would be doing that, it really is something to think about. So all the people that would be doing that are, they're in Montauk right now. Like there's a story out today about a hedge fund guy that got arrested for drunk driving and cocaine and a bunch of stuff, right? In Montauk, right? Typical of a financial headline in June. All those guys are out there, right? So when they get back and everybody's playing catch up, on the monopoly game of hedge fund performance, there's going to be a rush to the entrance, not the exits. And, I keep beating this particular drum on my, Twitter account. There's just no downside. There's no downside narrative. It can't be found. Yeah. Even something like the ETH ETFs, which, Gary Gensler came out today and said the S1 approvals, which need to be approved for the ETH ETFs to actually trade. It's going to be an elongated period, right? Even that's a net positive for Bitcoin ETFs, because if you want exposure, that's the only thing you can get exposure with that's not getting on some weird exchange that you've never heard of and buying it and hoping you don't screw it up, right? If you're a 65-year-old guy, right? So, it's, we can talk about the ETH ETFs and that particular process. And knowing that was going to be the case, everybody in crypto was like, oh, we got approvals. This is so exciting. We're going to do this, that, and that. And, I've got guys that are legal on the side of BlackRock saying nobody was prepared for them to make this 180-degree turn.
Yeah.
Not only is the SEC not prepared, the issuers aren't prepared. It's easy to approve a 19B4. There's no meaningful paperwork with that. It's one form, right? You just check the boxes they're telling you to check. The S1s are an entirely different process, and nobody was prepared for that. And so the elongated process there probably pushes into July, mid to late July. And so that's an adjustment in expectations. But it's not an adjustment of my expectations. I believe that because of what I was told, that there's no way they can turn it around. That lawyers aren't going to work through Memorial Day weekend and nights to get this stuff done, and they'll work regular hours, and it'll just take time, right?
And didn't we see that Kathy Wood's ARK pulled out of the ETFs?
They're not going to issue an ETH product, which is interesting. Which, ARK's, Bitcoin product has done well, but it's in the bottom third in terms of flows of all those. So that is a harbinger of if she doesn't believe that there's going to be a massive wave of allocation to the ETH ETF, then why go through with it? And I tend to agree with her on that. I don't think there's going to be a ton of demand because the story is really difficult to tell. And in fact, I was on Spaces yesterday. Yeah, I think it was yesterday. And even one of the guys from Bitwise, this is their job. And basically there was like, yeah, the story, it's a tough story to tell, right?
Yeah.
And I think Rand jumped in and he's like, well, the story is, it's a base layer, blah, blah, blah. And I spoke up and I said, what are you talking about? I'm like, you think that you're going to sit in front of 65-year-olds and say the term base layer and they're going to have any idea what you're talking about? No, they're not going to know what you're talking about. It works with digital gold. Oh, okay, gold. I know gold is
Gold is, right? Yeah.
My grandpa and my grandpa used to own some gold. Okay, I'll put stuff in there. But how do you explain Ethereum to a 67-year-old guy?
I don't even think it is much explaining it to them. Is how do you get past the hurdle of explaining to the experts in the room why you don't go with another centralized effort that has higher throughput transactional capabilities and lower cost to operate? I don't understand how you make that argument. Like here would be my point. Show me another blockchain other than Bitcoin that has 90% of its tokens distributed, did it through proof of work, and never got hacked or failed or anything else, and it's still thriving in an upward trajectory of price and appreciation. Show me another one, and we can have a conversation as to whether Bitcoin has a competitor or not. I don't think that there is one that's even 15 years in the rearview mirror of Bitcoin. Then you say the same equation to Ethereum. I can show you 10 protocols that can run circles around Ethereum. And guess what? They have the same downfalls. They are centralized. They are somewhat of a traditional database to some degree, right? They're not a complete blockchain effort, if you will. They're kind of a hybrid, but who cares? We're talking about an efficiency delta. We're talking about instant settlement. We're talking about smart contracts. We're talking about Web3 development. All those things can be accomplished. There's about 100 bridges to choose to cross that river. There's only one bridge to choose to cross the river to a store of value, in my opinion. And so they can't even be compared. They're not even the same. It's like comparing a car and a lizard. They're not even in the same stratosphere to compare. They're not even animal. Like they're totally different entities at every single level. So if you look at Ethereum, it's like, okay, again, my point is where do you draw the line? Okay, so we're letting centralized efforts that are, quote, ICO driven entities now become ETFs. Okay, where do we stop?
Where do we stop?
What's the rule? Tell me what the rule is.
Did you see on CNBC this morning, Gary Gensler was there, and again, that's where the comments came on about the Ethereum ETF. Like Jim Cramer, tongue in cheek, was like, what comes next after Ethereum? Like, I think Bonk is great. Like Bonk, he's like, look here, Bonk has like millions and millions of dollars in a transaction each day. Bonk is next. And so to your point, like that's exactly right. Like it would have to be fairly arbitrary for them to choose like, oh, you know what? Solana doesn't qualify, or XRP doesn't qualify. Well, why? I mean, what are the material differences there versus Ethereum, right? So that's a tough one. Other than the fact that regulatory agencies can be arbitrary whenever they want, and the only way that you adjust that arbitrariness is by taking them to court. So somebody associated with those blockchains and really wanting an ETF would have to do that work.
I've used Ethereum a million times, right? And do you know how easy it is as a consumer to go in and accidentally pay $150 in gas fees for $100 transfer in ETH.
Mm-hmm.
It's like, it's so easy. Like people who have been in the space for a decade do it all the time, because here's the reason. It shouldn't be that way.
Yeah. Yeah.
And you assume as a human being with the architecture and the endorsements of an ETH ETF that that's not going to take place. And that you can't, in my opinion, you can't have a product that has fees that can literally be larger than the value transfer and it be a normal occurrence at a rate where everyone has to double check transactions at a level of scrutiny just to make sure that they don't do the dumbhead, post it on Twitter, I'm an idiot move. And I just don't see how you can look at a network and go, yeah, that's the base layer we're going to build on. That's ludicrous to me, honestly. And moving it to proof of stake is ludicrous. Why? Well, you talk about who owns enough ETH to be the centralized effort, who has the required ETH to participate in the voting mechanism. Well, it's the same people that developed it. It's all of the people who, like, you think that's going to be, every vote that they have will be a consensus vote.
Yeah.
Because one person at the top will go, here's what we want to do. And boom, everybody will follow suit. Well, that's not decentralized. That's not me buying. If I'm a new participant in ETH and I really want to participate in that ecosystem, I'm outside of that club.
Well, herein lies the point of the problems that an ETH ETF has. Like 90% of what Tillman just said, 90% of people that have the capital to allocate to an ETH ETF would not understand any of it. Literally not understand any of it. I mean, at all. So you add that to the fact that you have to craft a message with that reality. Like I made the point yesterday in Spaces that, okay, maybe a decent sort of analogy to use to be able to be a sales guy, selling the ETH ETF is, Ethereum is what Cisco was to the early internet, right? That's a decent analogy. Well, here's the problem though. If you're one of the ETF issuers, you can't use that analogy because you'll probably have to pay Cisco millions upon millions of dollars in fees associated with their trademark, right? You can't use that analogy, right? So that's a problem. Good analogy by me, but they can't use it. So, and then the other problem you're going to have very short term with the Ethereum ETFs is Grayscale exists. And their ETH ETF is got $11 billion that has been sitting there for forever that people want out of.
Yeah.
And so, that dynamic could make for some ugly first, 30 to 90 days of that product.
But Chris, I watched your technical analysis on ETH, and I agree with you. That's what I think makes this so interesting is that we can all be right, and the price can still go to $20,000. The markets can stay irrational longer than you can stay solvent. And that's why I don't bet against ETH. I promise you that much. That is not something that I'm going to do. And I won't do that just like I won't bet against Solana. Why won't I bet against Solana? Because I know there are very, very powerful people that want it to succeed, and they're all a lot more powerful than me. So why do I want to go and pick a fight with 5 billionaire giants that have every means to pump that thing to the moon again? And so it's just like, I do think there's a certain level of tribalism that exists. Like you ask people in the crypto markets, like, what do you think is the best one? Well, their answer is whatever they made the most money on.
There you go. Exactly.
That's literally their answer. But they have no reason why. They have no reason. It's just because it changed their life. That's not a bad reason. But let's be honest. That's really the reason is like if you make a bunch of money on Bitcoin and you're, one of the guys who we know is the the elite Bitcoiners, why wouldn't that you be a Bitcoin maxi? Like, you have every reason to try to concentrate the market into your choice as as anybody. And so I think that what is hard about this is that there's so many options out there, and we were talking about this offline, Chris. I think what people need to stop looking at is, I'm going to get rich here, or I'm going to invest here. I think diversification is a natural, healthy way to educate yourself on a market, right? It doesn't mean you have to put a lot of money to work, but I think the education alone, if you're interested in crypto, if you're interested in what the different protocols, how they operate, what the best way to find out is to use them. That is the best way to find out. And if you do that, then you'll leave, even if you lose a little bit of money in fees, or you buy some stupid NFTs on Solana, like whatever that education is, don't go into it looking as like, I'm going to get into the big project. Go into it thinking like, I want to find out what the protocol's about. I want to learn what everybody's talking about. And I want to learn why everybody on this side of the tribe thinks this is the best thing since sliced bread. And I think when you go into enough rooms, like I go into as many spaces as I can, and I want to hear from everybody, because if you go into the meme coin spaces, for example, those people are looking at this like a lottery ticket. Yeah. And I can't argue that case. It's better than a lottery ticket, in my opinion. If you just threw money at every single one of the meme coins at the very beginning, right when you heard about them, in my opinion, you probably would come out better than if you just every day take your paycheck and go buy lottery tickets. You see what I'm saying? And so, to everybody, let's allow people to use blockchain in a lot of different ways, so that we can really explore how many different ways we can use it. That's where the innovation comes in, right?
No, I think it's absolutely a great point that you make there, because just in life, right? I mean, I think maybe some people that are newer, I mean, they get a little irritated with talking, but often a lot of what I talk about markets and about trading and investing in life are the same thing, right? Because it's all based around these emotions that we have and these psychological ticks that we have and whatnot. And so I'm a big proponent about, listen, if you want to really understand something, use it. Mm-hmm. And so I'm in that every other part of my life. If you think, because a lot of people get out there, especially with the internet, and especially with social media, and everybody's got their ideas about things that they've never been a part of. Oh, well, it's this, but you've never actually tried it. So you're missing a very key component, I believe. Right. And so I've always been a real big proponent about that in life. And I think the point you make here about especially this crypto industry, right, and figuring out where is the effort best put, what are the things where we should eventually be kind of funneling the energy into, but you won't know that unless you're trying all these other things. So
it's kind of a form of financial empathy. It's like, if you look at some of these political marches and rallies that go on, you may not understand or believe, at face value what the people are marching for. But I think as human beings, if we take a step back and say something is uniting a lot of humans, that makes it important. You see what I'm saying? Like, we have to address like what is the part of whatever they're talking about that's uniting all of them. And we can get to that kernel of truth and still disagree. There's nothing wrong with that. But if you do get to that kernel of truth and still disagree, you have empathy and respect for those people in a way that you don't, if you just think they're stupid and they're like, the blind, quote, leading the blind. A lot of times they are the blind leading the blind, and we all are blind following other blind people to a large extent. But, it's important to like learn from people who have other opinions from you. I think that's a really valuable thing that you should take away from it. And the sad thing about the crypto space is it is so divided. we would be so much better off as a community if we could all acknowledge the value that each project has, for what it is, and be confident in that value, and not need to be something that we're not in order to make ourselves feel like, we're the end all to end all. It's no different than, any technological boom. If you look at AOL, for example, they were the end all to end all for me when I was getting on the internet. Dial up, I didn't, maybe Earthlink, but they were, but they're dead and gone now. Times changed. Different technologies make those opinions obsolete. And so why get entrenched in the mud and in the concrete instead of like staying on the surface and going, hey, how can I learn about everything that unites human beings in as quick as possible fashion? And in the crypto space, good news is people are loud and obnoxious about their opinions. So there's no shortage of them, and you can go out and find them.
You know what, Chris, I have a little bit of a complaint about today's show, and let me talk it through with you real quick. Tillman kind of pulled a rabbit out of the hat today. He leveled up, his game a little bit. It's well known inside of our company that I'm the handsome one. All right. That's well established, but he went above and beyond today. And so you and we're going to have to level up our game too. Like he really went for it today. He does not look like that normally. I just want to make that clear. He showered, a little bit of a shave going on. Yeah. So I just want that to be on the record. I want it to be in the notes for today's show. So,
you don't need to say that. Everyone will see that evidence over time. I may grow my beard out to here and have the peach fuzz, half bald look. I am not opposed to looking
live
horrible.
Forever on YouTube. I just want it. I want it for the record. It needs to be stated. He really put in some work today. I'm proud of him. I think it's great.
You know what the truth is?
I'll tell you
the
guys,
truth is, 2 days ago was my 21st wedding anniversary, and I saw some of the comments. Thank you guys for wishing me a happy anniversary. I do what is necessary to please my wife. So if I look like a scrub and I need to clean up, that's the reason why I do it.
So what you're saying is, if we see you kind of dragging a bit here, we need to give the wife a call or a text real quick and say, hey, you need to get him in line. He's kind of bringing down the show here.
Yeah, that's exactly right. You've found my Achilles heel.
Well, listen, man, I think it's been a great conversation. End of the day, guys, Andrew, I think said it best earlier with there's nothing at the moment that's happening here. Even looking out in the near to midterm that says we should worry about Bitcoin, topping out, heading lower and whatnot. All the news, everything coming in continues to be positive. It continues to bolster it. ETFs, again, almost $900 million yesterday alone. I think BlackRock did 300 somewhat million, and then or 200 somewhat million, and then
they did
Fidelity
like
did
250, and Fidelity did like
367. Wasn't it?
Yeah, big number.
Absolutely insane. So, try not to ride into your emotions too much. If you're interested in trading, and being in and out of the markets, we've got a TWC Trading Academy. We've got Arch Public. Both the links are below the video here if you guys want to do that. If you're interested in just buying and holding, my suggestion continues to be the same thing it is. I do it here. I do it Fridays on my market analysis show. I do it on Mondays when I'm talking to Gary Cardone, when we're co-hosting spaces with Samuel. When I go on Cardone Corner, I always tell you the same thing. Put the money in, stop worrying about it, go outside and figure out how you can make another $100, go mow a lawn. I mean, I kind of jokingly say that, but at the end of the day, the idea is if you're trying to buy Bitcoin because you believe in it long-term and you see the possibilities long-term, then your goal should be to get the money into it and then figure out how do you make more extra income. Don't take money out of what you need to pay your bills and live your life, but find ways to make extra income and put it into it. And so that's kind of, the way that you should be thinking when you're approaching assets that you expect to go up in value and you expect to hold for longer periods of time. You should be looking at how do I obtain more of that? Instead of worrying about the price point you're getting in at, think more along terms of, okay, how much am I trying to acquire in total, and work with that? Because I think the three of us here are in agreement that, as Bitcoin continues to mature, as the market continues to mature, as we start seeing those other options and derivatives products, which are bringing in more money, raising the value and whatever, ultimately, we're going to be able to treat Bitcoin like we do with other assets, where you can, these financial products will be created off it, where you can get loans with decent terms, not the crypto loans that you guys get out there now, but real bank kind of loans with decent terms, where you don't actually have to sell it, right? You don't have to incur the, here in the U.S., the capital gains tax and all that stuff. It just continues growing in value. You're taking the value out through that loan, you're paying it back. It's continuing to grow in value. And then it becomes something that's generational for your family. So that's kind of the way I look at it. But again, if you are interested in trading, guys, we've got the Trading Academy. Again, links below there. We've got group coaching over there, teach you all about it. And even if you do that, think about taking those skills you have there over to the Arch Public, and go over there and use what you're learning there to put together something more automated, that way you don't have to worry about those emotional ticks that are still going to push you. I'm telling you guys, been doing this a very long time. Your emotions never go away. It's never like, oh, I don't have any emotion anymore. They just become easier or not as difficult to deal with, because you have experience. You've learned that what you're doing does work. You're going to have these pullbacks and these things along the way. You understand with price action and volume what the market participants are doing. But, again, Tillman pointed out earlier, or Andrew did, I can't remember, one of y'all guys did, the market, like equity markets, is 90+% automated, guys. Retail is only about 24, as of just a year or two ago, about 24% of the total stock market. So, everybody's always wondering, well, when's retail going to come in? Well, it's not that you really need retail. It's probably a little bit bigger retail involvement in crypto, maybe, or at least it was last cycle. But, these things that you guys don't understand about what's going on, that really kind of, once you understand it, it changes the way in which you view it. So a lot of information out there, a lot of possibilities. But I would say even if you don't go through us or through Arch Public or something like that, do what you can to find somebody that you can trust. Don't expect for the information to be free. I always worry about free information, guys, because, the free information, like if you go on the internet right now, you're going to find a lot of trading information. Most of it is half truths. Some of it's even outright lies, not because people are trying to lie to you, but because they don't know any better. They repeat the same things they've always heard, which generally a lot of times don't have enough in it to kind of really make enough nuance to understand what it means. So just be careful when you do that, but try and find somebody. If you're going to be doing the markets, try and find somebody that can help guide you along the way, to help you get an understanding so that you can approach them. So where you make money, that's what we do. Yes, we all charge. We got products, services we charge. But at the end of the day, we hope that if you're in the market, you're going to take it seriously and you're going to do what you have to do to make sure that you can become successful with it. Because either way, we're going to take your money. I'm just saying.
Chris, good stuff. I personally have a hard stop because I got a meeting that.
We'll get out of here.
But absolutely love the conversation. Fantastic stuff, and yeah, man, love these each week. It's good stuff.
Yeah, I'll leave you guys with one question that we can pick up next week. Will self-custody Bitcoin separate itself in price from the Bitcoin you buy in the ETF?
Oh, that's a good question.
Yeah.
You guys leave the comments below the video. Let us know what you think. We will jump on that next week. We appreciate you guys jumping in, following in as always. We got more people watching this week than last week, so that's a good sign. As always, guys, remember, the only thing you control is how much you lose in the markets, right? So risk management, end all be all of it all. However you go about it, you've got to figure it out, okay? Tillman,
and Andrew, for all these new guys, I'm the pretty one. So
no. I'm getting on Twitter. I'm making a post about that right now.
Oh Lord, that's great. All right,
See you guys.
You guys. We will see y'all next Wednesday, same time, same place. Take care, everybody.
All right. Bye.